Hello listeners, and welcome to the Montel Weekly Podcast, bringing you energy matters in an informal setting. In today's pod, we will delve into Europe's environmental markets, for example, guarantees of origin. These are controversial. For some, they are the most efficient way of verifying renewable energy output, while others say the system is open to greenwashing. Meanwhile, in Europe's carbon market, prices have been very volatile in recent weeks on fears of market intervention to curb speculation and spiralling prices. Helping me, Richard Sverrisson, discuss the key issues in both these markets is Marcus Ferdinand of Greenfact. A warm welcome to you, Marcus.
Well, thanks, and good to be here, Richard.
Excellent to have you back on. Let's start off talking about guarantees of origin or GOs. Now, what are current developments in the market, Marcus?
I mean, what we have seen, especially over the past year, is that prices have actually gone up quite a lot. European guarantees of origin prices actually reached all-time highs in 2021. They quadrupled over the course of the year, which was basically driven by stronger demand and operators' long-term commitments to renewable energy. Also leading to a much deeper and actually more volatile market as we compared to what we had seen before. So yeah, in the short term, actually, the activity really began to pick up significantly in the new year. GO prices increased significantly across all recorded vintages and technologies. And that was especially so for the 2021 production vintage. So we're seeing more demand for GOs from buyers than historically observed. And in particular, we're seeing some buyers having waited quite long with their purchase and are now entering the market in probably somewhat of a rush because prices didn't decrease like they expected. So we're also seeing more producers holding off on selling GOs while they look at increasing prices and obviously wanting to kind of benefit from that development. And so I think especially kind of what we see in terms of increasing voluntary commitments to consume renewable electricity through corporate target setting and initiatives like the RE100, as well as climate policy agendas such as the ongoing Fit for 55 process, which I think ties both into GOs and also the ETS to a large extent, will certainly keep demand for green certificates growing.
When you say guarantees of origin have hit historic highs, if there's a particular type of GOs? Are we talking Nordic hydro, for example, or another type? Because that's the thing about the guarantees of origin market, isn't there's not one standardized product, is there?
Exactly. Yeah, there's no one standardized. I mean, obviously, Nordic hydro is sort of the benchmark contract for other contracts to follow because there is most liquidity in that contract. And I mean, all the other technologies also obviously increase. So, I mean, if you look into Nordic hydro, I mean, we're currently talking about prices of around €2.30 or so for the 2022 vintage. So this is a manifold increase. But we've also seen that for kind of the EU kind of products like EU wind currently trading at 177 for the 22 vintage, as well as solar being at 170 or so. So all of those kind of followed the Nordic hydro upwards. And I think this is more a general trend across all markets. And I mean, especially obviously Nordic hydro was pushed by the relatively low water levels in the Nordics, right? So, I mean, that is obviously one of the main drivers there, which kind of pushed kind of the benchmark prices higher.
But is the bull run in commodity markets, is that also having an impact, Marcus, would you say?
Well, yes and no. So I think what we have seen is that the bull run in commodity markets was partly also caused by the dry situation in the Nordics, right? I mean, especially when you look into me living in Norway, kind of seeing the power prices being at multiple levels compared to what we have seen in the previous years is mainly because of two factors, right? You have low hydro situation combined with high gas prices in the rest of Europe. So the low hydro situation is obviously also one of the main drivers for GOs, whereas the gas price is not necessarily reflected on this, right? I mean, the difference between GO markets and the more conventional power market is obviously that the demand side for GOs is driven certainly by other factors than the demand side for the conventional power side. So for GOs, we talk about voluntary demand in a way, right? So you have target settings at corporate levels. You have, in a way, consumer choices, which make this market kind of developing on the demand side. And I mean, this is certainly a bit different compared to what you have on the conventional power side, where the consumption de facto sets the demand side.
What are your expectations for demand here, Marcus? Do you, in this year and maybe the coming ones, do you see, you talked about the growing voluntary market. Do you expect this to continue to expand? And from what sectors in particular, or countries even?
Yeah, it's an interesting one, right? I mean, again, living in Norway is living at the center of the geo market in terms of production of certificates or of issuance. So Norway is responsible for around 1/5 or so of the geos pushed into the European system. So, I mean, that policy element is obviously very, very important. I mean, we can talk about that a bit more in detail, but the Norwegian government has announced in its coalition contract, actually, that it wants to, basically get out of this system. So, I mean, watching the policy and regulatory side on that end is obviously important. And then I would say, I mean, given the awareness of low carbon solutions and strengthening legal and regulatory framework and also changing consumer choices, I'm quite bullish for geo prices actually in the mid to long run. Even though I expect volatility to likely persist in this market because, it's still a relatively fragmented market, as you mentioned earlier, Richard. So it's very difficult in a way to keep track of all the different kind of technologies, vintages, and probably a bit more, let's say, premium contracts, which are also having like some geographical kind of selection criteria there. But in the end, everything is in a way driven by the increasing voluntary commitment to consume renewable electricity, right? Through corporate target setting, which will, in my view, keep the demand side growing.
Absolutely. And if we're talking about prices, in the euro denomination rather than euro cents, obviously, then geos become much more interesting for producers and for people wanting to sign PPAs.
Yeah, exactly. I mean, I think this will play a much larger role also when it comes to PPAs, actually, in terms of integrating this more and more into contract structures there. So to basically provide a relatively significant income stream then as well on that end.
There are some markets, something like Dutch or Belgian geos that are traded a premium to Nordic hydro. Do you see that kind of flattening out, or do you think always some local guarantees of origin are going to be more expensive than the sort of generic, if you like, the benchmark Nordic hydro ones?
I think the more attention you pay to attributes obviously will kind of justify a premium, right? Because obviously there you are much more picky in terms of the guarantees of origin that you would accept against your own targets. So which obviously comes then with a certain restriction on the available supply. So I would expect this premium to maintain whenever you specify. And I mean, this is again, I think also tying into a little other discussion. But I mean, at the moment, the current system of geos is basically a system where you basically get a chunk of geos which are marked against like an annual production of renewable kind of electricity. But there are some corporates, for instance, who want to go further and kind of matching actually their electricity consumption on a 24/7 contract, right, on an hourly basis per year. So this is another kind of potential development in this market I could foresee as a very interesting premium opportunity. So to basically provide these hourly contracts to the market. But again,
and they would trade at a premium.
Yeah, that would trade at a premium for sure, because you have to make sure that you're actually with every hour in the year, you have to provide that electricity, right? Which is then a bit more like fluctuating, obviously, over the day in terms of prices, and will set certain investment signals to those hours where it is very difficult to produce electricity from renewable sources, right? And kind of make sure that there is an incentive for building out kind of more generation assets to cover these hours.
You mentioned this 24/7 developments. Do you see this becoming more relevant or gaining more prominence in the months to come?
Yeah, I think there is a growing kind of interest in kind of matching consumption with production on kind of a very, let's say, granular, in a very granular matter, right? So I mean, with geos at the moment, it's basically possible to provide information on location and technology, but there is no exact timestamp on it. And I think this means that basically current geo system, you buy a certain amount of renewable power from a producer as a bulk contract, use that against your annual compliance, right? So I would say an hourly or an even 15-minute certificate would solve basically or would kind of create a higher administrative burden in order to kind of manage and certify. But at the same time, it would basically provide much more support in a way to the discussion on intermittency and basically the intermittent availability of renewable power, right? Because you would in a way create this incentive to basically generate renewable power on an ongoing basis, which I think is the direction we're heading to, right? I mean, if you see how the power system is developing and how also the demand from the policy side is developing towards more and more renewables, which are required to run baseload in order to kind of basically meet our climate targets, there is a need for more constant coverage of or matching of demand and supply. And I think this 24/7 GOs can play a role in incentivizing that.
And perhaps it could also encourage things like storage or demand response as well at the same time.
Yeah, that depends then in a way, I guess, on how you create such a system and who could claim basically the certificates and also what the pricing level would be, right? Whether this incentivizes in a way support structure to kind of store and release renewable electricity at different points in time. So I think this in the end, it's a question of like how such a certificate system would then be basically designed.
Marcus, we both live in Norway, and you mentioned what was in the Norwegian government's coalition agreement. What are your expectations here? I mean, there's been no more detail since it was mentioned in the agreement. I mean, what do you think will happen here, both in terms of the eventual outcome and in terms of the time it can take?
Yeah. I mean, I find it always fascinating how like one sentence can actually stir up a whole market, right? Or put it into question in a way. So it was a one sentence kind of statement in the Hurda platform, which is the government or the coalition contract, which basically said that Norway shall basically go out of the GO system, right? In order to prioritize the country's energy needs. Yeah, there is obviously lots of discussion on why this has happened. So, I mean, Norway is a very renewable heavy country. So around 98% of the electricity generation is renewable, which basically means that industrials are claiming that all of their production they do here is based on renewable power. And they do not see the need necessarily to buy GOs to prove that, right? I mean, which is in a way, it's a question on how you actually see this, or whether you accept that this GO system is existing or not. Because when Norway is exporting GOs to the rest of Europe and is not canceling it domestically on an accounting basis, obviously those industrials are producing with grey power, right? I mean, as you said, there's no further explanation when or how the government wants to remove the system. And there's also no further explanation on whether there are plans replacing it with, for instance, a domestic GO system. So I also think it remains very unclear whether such a move would be at all compatible with the EEA agreement. So, I mean, I remain relatively skeptical that the Norwegian government will be able to follow up to its announcement as it stands there, right? So, I mean, there needs to be a very credible system replacing this, which then is in a way accredited by the EU to kind of potentially swap from one GO system to another, which is in a way a bit beyond of what's in the platform. Yeah, and I think when we talk about the consequences for the market, as we said, Norway is the largest issuer of GOs within the AIB. And I mean, the Norwegian GO issuance in 21, I think, was around 150 terawatt hours, where around 29 terawatt hours were cancelled in 21. So we talk about a GO or a net GO export of around 125 terawatt hours from Norway to the rest of Europe, right? So if you use kind of the current Nordic hydro GO price, like the vintage 22 price of 230 euros per megawatt hour, the annual export value of Norwegian GOs is valued around 290 million euros. So this is a significant income stream, obviously. And in a way, puts up the question, right? What is, in a way, the benefit of scrapping this? So saving some part of the costs on the Norwegian industry for purchasing GOs obviously comes at the expense of a much higher lost income stream for Norwegian producers. And at the same time, likely an increase in European GO prices as well, given the reduced supply from Norway then.
When you say AIB, for those listeners who are not aware of that, that's the Association of Issuing Bodies, which basically is the governing body of the GO market, if I'm not mistaken, Marcus?
Yeah, that's totally correct.
And also, obviously, the issue is of attracting investments into Norway, data centers or, whatever they might be, getting even renewable operators or corporates to come in if they won't be able to get a guarantee of origin from renewable energy production?
Yeah, I think this is, as I said, I think just removing it is probably not the key, right? So you would need to replace it with another system, which de facto replaces the current income stream with something else, which makes it attractive to build out these generation assets. And that's where we are still waiting for a proposal from the Norwegian government to evaluate the impact.
Yeah, so we'll keep our eyes peeled on that, and we'll be all our reporters here at Montel will be covering that in close detail should there be any changes. But there's also another aspect to the geo market which I'd like to touch on, and that is the UK's role, post-Brexit. To our understanding here that the UK is allowing some European guarantees of origin into its system. Would that be correct?
Yeah, so Ofgem is basically is able to recognize GOs issued by other EU member states, which basically means that there is a certain issue again with countries like Norway because they're unable to recognize any GO equivalents that are issued by non-EU member states. And Norway decided not to be an EU member state some time back. Ofgem will not be able to recognize Norwegian GOs, but the EU member state issued ones. So for the continental EU markets to the UK, you would need explicit booking and nomination of interconnector capacity, which in a way is in the same period as the generation. So GO certificates or cancellation certificates specify the month of generation, which basically would need to be reflected within the same, or you would need to have explicit trading within the same month as the generation to make this transfer happening.
We're seeing that a little bit. We're seeing some remit messages where companies are buying and selling the same capacity on the Nord Stream link cable, and this is a part of the guarantee of origin market. Would that be a fair assumption?
Yeah, I would say so. I think this is reflected there.
The UK regos trade at quite a large premium to the Nordic Hydro. If the Nordic Hydro is at 230, the UK's maybe double that, or is it maybe triple that even?
Yeah, it's quite bullish. So the prices for non-bio regos, so the dark green regos is around £7 per megawatt hour. So it's quite a substantial kind of upside from the Nordic Hydro one. And biomass is I think it's currently above £5 per megawatt hour. So, I mean, we have a certain backwardation here in the market, but it's still trading higher than the Nordic Hydro ones.
If we can now, I know you're also an expert on Europe's carbon market, Marcus. You've been an analyst and looking at the market for many, many years. Can you explain what's currently happening with carbon prices? They almost touched 100 and now it's almost back down to 80. What's going on there?
It's a very interesting development, I would say, and there is a lot of overlap between different factors. So I think the underlying topics remain unchanged compared to the weeks before. So we still have a very high energy complex favoring coal over gas burn. We have a risk premium associated with the Ukraine-Russian tension. We have continued interest by investors in the low carbon space, but we have seen quite a few, let's say, developments on the policy and regulatory side, so that element is gaining influence at the moment. There's the amendment phase in the European Parliament on the ETS review and the MSR file, which is in full swing. So we see news there coming out every day. And we also have seen that some member states started to hand out free allowances to industrials for this year, which at least some market sources quoted as being one of the bearish price drivers over the past few days. I mean, overall, I'd consider the market still slightly disconnected from fundamentals. So we see lots of technical trading, and the market at the moment acts a lot as well on proxy drivers, which dictate the daily moves. So you have these underlying factors and you have development on the regulatory policy side, but at the same time, I would still say the overall price level is still a bit inflated compared to what the fundamentals show us.
And when you say proxy drivers, Marcus, what do you mean there?
Well, that means that the market reacts on a daily basis to news inflows, but not necessarily reflecting the overall price level, not necessarily reflecting the fundamental value of the market.
We're recording on the 18th of February, so listeners, you have a whole week in which a lot could change. But generally, we're seeing, you mentioned the European Parliament and Peter Liese, the MEP. Do you expect there to be more stringent price controls mechanisms, or has this been kind of blown a bit out of proportion?
Yeah, so Lise is actually the rapporteur for the ETS review file. So he just put out an amendment to change the Article 29A, which is basically the price containment mechanism in the ETS. So, I mean, there's lots of amendments flying around in Brussels, right? And I mean, especially at this phase of the legislative and regulatory process, a lot of things can happen. I mean, what we see, I think, what the market witnesses is that a lot of these amendments that we have seen in the recent past are probably considered to slightly weaken the Commission's original proposal, market and price-wise, right? And I think this is that's one of the elements that is currently impacting the market. When we look into the amendment of Article 29A specifically, I'm not sure if you want to go into the details, but I'm just just repeating for the listeners what it is about at the moment. So at the moment, if for a period of 6 consecutive months, the average EUA price increases by more than 3 times the average of the preceding 2 years, the Commission's Climate Change Committee is empowered to inject additional volumes via auctions, basically. And Peter Lise's amendment now basically says that allowances would be automatically released into the market. So without necessarily the Climate Change Committee needing to take action once the EUA price exceed for more than 6 consecutive months again. Basically double the average of the previous 2 years. So kind of lowering this trigger level, right? So in such case, 100 million allowances from the MSR shall come to the market over a period of 6 months. So there is a bit more of an automatism in here. And it's also lowering in a way the threshold or the trigger level, right? Which makes the application of the article more likely, I would say. Because the threshold for the procedure to kick in gets lowered. But at the same time, I mean, if you introduce such a change now, when this price rally has kind of taken place over the past few months, and I mean, before this is implemented, we will probably see another 2 years going by. The ETS price, if it remains at these levels of 70, 80, 90 euros per ton. I mean, then we talk about a trigger level of something between 140 to 180 euros, right? Which again seems rather unlikely that the Article 29A would be triggered.
So a lot of these reactions in the market have been overblown, would you say then?
No, I wouldn't say so. I mean, it's in a way, it's a reality check of the current price levels, right? And again, it's in light of what has happened last year. So the price rally as it took off was justified to a certain extent, I would say, from a fundamental perspective. But then at some point we basically left in a way the fuel switch range in the market, right? So basically where a higher gas price would make a difference. The ETS price still continued to climb, which at some point then was more on technical trigger levels and basically also sentiment. So I think we're currently just seeing a bit of a recheck of whether this price level justifies the fundamental side of the market. And I mean, I personally think that when we see gas prices potentially coming off over the next year or so, the ETS price should steadily correct to levels between 70 and 80 euros, probably within this year still. And I think what we see at the moment is a bit of this reality check that happens.
When I say overblown, I meant more the reaction to the Article 29 proposal. When, you're talking maybe 140, 180 euros in 2 years' time, it seems to be a bit disjointed from what's happening currently now in the market.
Yeah, I think, in the end, it's not only that Article 29A, right, which is kind of flying around there. So, I mean, we are also seeing a few reports actually in terms of, or at least a discussion, whether or not to kind of put more stricter checks on the investor side of the market. So actually there is a report by ESMA expected end of March, which is basically the bit more detailed report following what we have seen in last year as an initial report where ESMA actually should look into the correct functioning of the market, right? And I think this is also joined by a follow-up report by the Commission on the previous toolbox communication, which is expected for end of March. So, and in this regard, there is kind of different camps around who also advocate for introducing position limits, for restricting the participation of financial players, for instance. And I think this is a debate which obviously leaves a certain mark on the current price or on the current market behavior in the ETS as well.
Absolutely, something. But obviously there'll be drafts, there'll be leaks, and prices will react. We have actually discussed this before, haven't we, Marcus? The curbing speculators aspect of the ETS and how that should proceed. But I think that's about all we've got time for today. And hopefully maybe after the ESMA report comes out and we know a bit more about what's going on, we can return it and discuss it once again. But thank you very much, Marcus, for an excellent overview of current developments in the guarantees of origin market and what to expect in the ETS. So thank you.
Pleasure, Richard.
So listeners, you can now follow the podcast on our own Twitter account, aptly named the Montel Weekly Podcast. Please direct message any suggestions, questions, or let us know if you think you have a good idea for a guest on the show. You can also send us an email to podcast@montelnews.com. Lastly, remember to keep up to date with all that's happening in energy markets on Montel News. You can subscribe on Apple Podcasts and Spotify or wherever you get your podcasts from. Thank you and goodbye.